Woohoo! It's snowing. I think it's honestly the first time this year I've seen snow, in Berlin at least. It melts pretty fast. It's more like little hail than snow, I gotta say though. Look how quickly whoa! Oh my god. It literally just stopped. Just totally stopped. Well, and that wraps up another trading day. Even though today was a red day, I almost felt kind of relieved. I was thinking, it's been a while since we've had a red day, and I know you should never, always assume there's going to be a red day coming up just because your last, 3 days were green or something like that. But I was kind of getting the feeling like, oh man, maybe I'm getting a little shaky, maybe I'm getting a little overconfident or something like that. So having a red day today, that wasn't that bad, kind of puts, I don't know, I felt kind of good today. Plus our red trade was actually, totally calculated. I maybe didn't get out of the trade as quick as I probably should have, but overall, I kind of did everything that I wanted to do. And that's a trade that I do over and over again. And it's one of my best patterns. So, this time it just didn't work out. It wasn't that I was doing some revenge trading. It wasn't I was over trading. It wasn't I was trading past 11 o'clock, which, it was getting a little late in the day. So that was something to think about as well. Overall, though, it was a crazy hot market today, and you guys probably noticed on the stream, I was a little bit overwhelmed at first. I didn't know what to trade. Everything was just absolutely exploding, including new gappers and gappers from yesterday. Again, though, one of my best setups was in the first 15 minutes of the market open. It was AHPI as it was pulling back to some really big support areas. It was like 5.5 something or like that. I was a little bit iffy about this stock because it didn't have a catalyst, but honestly, nothing had a catalyst today. Everything was just up on macro news, so larger news about the whole industry itself. Anything that was a biotech or in the medical supply sphere, drug supplies, anything in that area, all of those small caps were absolutely ripping, and they kind of have been ripping for the last few weeks. So I was a little bit shaky on it, but that was the time to get aggressive. The market was on fire, at least the small caps were on fire. The market was dipping down, but those first 15 minutes, especially on a day with so much volatility, would have been the time to get aggressive, because this is the time that everyone is jumping on the market and is looking for those big breaks to the upside. So being aggressive right out of the gate, and then at around 10, being a little bit more conservative, which we were, and we avoided some really big losses by having our risk management in check. And then honestly, by 10:30, just wrapping up shop. Again, if I stopped trading at 10:30, it would have been a much, much better day. Plus, I had more time for other things. So yesterday's lesson was definitely just reinforced really heavy today. Now, on a slower day where there's not that much gapping up, the markets aren't moving too much, then it might make a little bit more sense to probably get a little bit more aggressive around 10 o'clock as stocks maybe pull up above VWAP, hold support, and start ripping up higher. But days like today, everything after 10 o'clock kind of started selling off and pulling back. And right behind me, all the stocks are kind of still selling off. It's been absolutely aggressive out there. So I'm happy I wrapped up at 11 o'clock, even though I probably should have still wrapped up at 10:30. So I'm going to be reviewing the stocks we were trading today. Plus, I want to talk about 2 other stocks and my Roth IRA account. Now, if you guys have been here for a little bit from end of November, December, and then beginning of January, I started this whole small account challenge in our Roth IRA account. But then as we were making progress, I was thinking, well, that's not really good, because I want to take this $25,000 once we reach our challenge goal and put it into a margin account so I won't have all these limits. So I decided, okay, let me stop trading in my IRA, which didn't really have that much money in it to begin with, but I withdrew as much money I could out of my Roth IRA account without having any tax penalties and put it into a new cash account. And that's the one we're trading in now. And that account had about, I think, $1,100 something in it. Here's a picture. And I was thinking, what do I do with this account? So I decided to apply my crypto trading strategy, which is primarily based around long-term support and resistance levels, and apply it to this IRA account. And since I started doing that in January, after we removed the $25,000 challenge money into the new cash account, and I applied that crypto trading strategy, the support line balances, we were able to grow that account from $1,100 to about $3,300 today. And this is not just, because of one lucky trade or something like that. We've traded this numerous times, and today I closed out another 2 trades, or actually one is still open now I think about it, and it's one of the losers. But I've been doing these trades over and over again, and it's really nice because they're very automated. I can set stops, I can set sell limit orders, so I could automate it as much as I want, and I've done that several times in the past. But the great part about this trading strategy is you don't really need to be online for it. And I thought, why not just try it out on the stocks, because this was my original trading strategy. It's one of my favorite trading strategies, and I use it across all different asset classes, primarily with my crypto trading, and then again, originally with stock trading. So today I also want to share a little bit about how I grew this account and how I plan to continue growing this account. Now, there's still a lot I need to learn about this specific strategy, so take everything I say with a grain of salt, because I've only been doing this for a few months, specifically with the small cap stocks. Although I have been doing this strategy as a whole for many years now, and I know it works. But again, this is a little bit different because I'm applying it to small cap stocks, and I still have to adjust the strategy a little bit for this asset category. Phew. Okay, I know this is a lot to take in, so let's dive into the charts now. Don't forget to hit that like button if you enjoy this content, and if you're totally new here and you have not done so already, definitely consider subscribing. I would love to have you join the channel. Let's get started. Whew. All right, so where to begin? There's just so much going on today. I'll try to zoom through it as quick as possible because I know that intro is a little bit longer than usual. So here's a quick little snippet. Here are my accounts, and right now the small account $25,000 challenge is moved to my cash account. That's been like that for several weeks. And we started in the Roth IRA account. So we'll talk about this one in just a second. But first, let me talk about AHPI. This was our second lead gapper in the day, and it was looking really good. It just didn't have any news, but it ran up 97% and then pulled back right around here 20%, which is really nice. I always look for something that is kind of still above VWAP, had a big gap, because I know a lot of traders are going to be looking for it, and then kind of consolidates in this area and doesn't really pull back more than, let's say, 25%. If it pulls back more than 30% and hanging under VWAP, so it would be in this area, I'm a little bit less interested in it, unless it pulls back to some big support and we could maybe enter a little dip buy there. But again, this is a $25,000 challenge that's focused on gap and go. So I'm looking for stocks that are gapping up and are ready to continue going. And I really want to be a little bit more focused on that, because sometimes I get back into my old ways, looking for always dip buys and supports and stuff like that, which is great and it works really well. But I kind of want to divide it up a little bit, and so the support lines is what I'm doing a little bit more with my IRA account. But very quickly as well, 22 million market cap, 4 million shares outstanding. This thing is just screaming that it wants to be traded. Not to mention, it's exactly my price category of, from $2 to $7. Those are kind of my favorite categories, because those are a little bit more predictable. With the penny stock, sometimes, you have these massive spreads. When it gets a little too large, or when they're in the $15, $20 area, like CODX, this thing ran up to 21, then pulled back to 13. I don't know. It's also a little different category. I mean, both can be great, but you got to figure out what you like to do. And for me, this $2 to $7 category, I like it. It gets really repetitive. So yeah, what I was looking for with this thing, it opened up right around here at 5.5. Actually, no, it opened around 6 and then pulled back just about 3, 4, 5% and was really holding this area well. We had a 1 minute pullback, kind of another selling candle come in here, but not a lot of volume. And then instantly this thing rips up one big breakout here, another one here, and then gets halted. Resumes out of the halt, a little shaky, but then rips up again and then gets halted again. That was a 40% move out of the gate. We could have done that and we would have been done for the day. Well, we would have had one more trade, but 40%, I would have been like, ba-boom, that's what I want to see. I like it. It was tough. I hate missing those because it happened a few times this week alone. So I don't know, whatever, it happens. So I get a little bit of FOMO. I'm like, okay, here we go. 7.81. We're breaking out here. This could get halted again. This could break out to new highs. Long-term chart. There's no resistance. Let me quickly look at it. Yeah, so we're breaking out all-time highs here, $8, no resistance above. This thing could really run. But then I was a little bit reluctant here. And, we had a decent entry. And as we pulled up and we were seeing some weakness, this is when I was like, uh-oh, this does not look good. And I'll tell you why. One, no catalyst, right? And then 2, it's having issues breaking higher. So I want to be a little bit cautious there. And then 3, so I guess 3 reasons is check out the time on this. This was at 9:55. And I always say my least favorite time to buy breakouts is around 9:55 to 10:10. And around 10:15 is when I'm looking for reversals and stuff like that. So I was like, and you can see down here, this is 10:15. So that's already in this area. So when all those 3 things kind of just hit me, they really hit me like a brick in the middle of the trade. I'm like, wait, what am I doing? This is a bad setup. I get out of the trade. I take my $4.20 loss, and I'm like, whoo, move on, which was good because in the same candle, it pulls back. This was a really aggressive pullback, actually. It pulls back, let's see, 8%, pulls back another candle, so 12% total, and then gets halted and then keeps on pulling back. This could have been a 20% loss if we sold at the bottom. So really good that I got out there. Doesn't always happen that clean, but really nice risk management on that one. I was really proud of myself in a way. I don't want to brag or anything, but it's not every time that you follow your rules to the T like that and you get instantly rewarded for it. I mean, yes, this was a loss of a trade, but to me, it was a giant win because it really could have been a big loss. So yeah, I don't know. I just had a big smile on my face after this trade. So it just shows you by, being disciplined is actually a much better feeling than just, throwing money at the charts and gambling. But if you follow your strategy and you have a loser, it's actually not that bad because you're consistent, you're disciplined, and that is how you become consistently profitable over the long run. The other one though, CBLI, at around 10:30, I really should have walked away. Everything was dipping back and it was a little harder. Not just were things dipping back, but they were literally getting halted on the way down. And that's not something you see all the time. So let's talk about CBLI, which was my last trade of the day. Let's go to it right now. And here we go, CBLI. Again, this thing is exactly what we're looking for, 42 million volume, and then right here, or 42 million market cap, sorry about that, and a 11.3 million shares outstanding. I think the float was even lower. So this is exactly the price range, the exact market cap, the exact amount of shares outstanding that I look for. The only problem was there was no news on it. So I feel like nothing today had real good news. Okay, let's go to the long-term chart a little bit. And I was looking to buy this on a pullback, and you can see here from 3 to 4, this is kind of an interesting range where, a lot of times the stock tries to break out from this area, but it doesn't, it gets pulled back, and then it, has resistance in this area. Support and resistance, it's an interchanging thing. Whew, sorry guys, I'm too excited. So my plan here was, okay, so we broke out of $4 with big volume and we pulled back to $4. And guess what happened after that? We ran 18%. Boom, that's perfect. That's exactly what I like to do or see. And guess what? We were pulling back to $14 or $4. And my goal was to wait as we broke 4.2 and then buy into the teens, and that's exactly what I did. 4.15. This was a little bit later. This was at 10:50. So this is getting close to my limit of not trading past 11 o'clock. Yeah. So here we go. Pulled back one, and then this bounce was very, very weak, and that's when I was like, oh man, this looks like it's going to go down again. I get out some of my position on this first bounce. And as we were going down, I get out my second position, and then I kind of hold the other one just for, I don't know, just for entertainment purposes. I have no idea why I held this trade so long. Anyway, we get out this one, luckily, again, at a nicer spot. Actually, this where we got out here was almost at the perfect low. We got out at 69.5. So this was not the best spot. So one of these was not the best. Yeah, overall, I think this was about a 7% loss. We were trading a little bit bigger position size. Not the worst. I probably could have just got out my whole entire trade when my original trading thesis did no longer work. So in this area, on the I guess you could say dead cat bounce, I probably should have got out there. And looking back at it, I don't know. But yeah, that was probably the way to go. CBLI did actually get halted again on the way down. So let's quickly zoom in here or zoom out. Right here on this candle, it was halted and just absolutely ripped. So in the long run, it was a good thing that I got out. This ends up being a massively amazing support line bounce at $3. So in that range we were looking for, it ran up 20%. You know, could have been a really nice move, but 11:30, I would have been delirious. I probably would have traded it here. I would have probably done a really silly mistake and missed this move. But CBLI, really clean, kind of predictable. I just, you know, this trade was a mess, and you win some, you lose some, and this time CBLI really kind of got me on the wrong side of it. Again, though, I like the pullback range, and I just should have got out quicker. You can't get them all, and this is a classic example of just, you know, cutting your losses. And luckily I did, and I only took a 7% loss because this thing really, really dipped hard. I mean, imagine we were still holding at 26% down. Ooh, that's not fun. Really quickly, let me just point out CODX and APT and actually AIM as well, because all of these are somewhat similar, especially CODX and APT. So big dollar volume up in the $400 to $600 volume range. That's ridiculous. We almost never see that, especially with these small caps. Their market caps are getting really large, but just a few days ago, they were also in that 10 to 50 million range. Shares outstanding under 25 million, both of them. So that's really, really nice. Yeah, exactly what we're looking for. The problem is, check out CODX. You know, down here is the daily chart, and 1, 2, 3, 4 big days in a row, and then APT, similar thing. Let me just quickly go over to it. 1, 2, 3, 4. Yeah, you could maybe even count this one, 5 big days in a row, and you can see now they're getting a little choppy in these $20 areas. Very, very choppy. They're holding their support very well around 17, at least this one. So this could have been, you know, buying any of these dips back at 17 kind of could have been probably a good ticket, because all these bounces were like 15%. So we could have honestly slayed some of those bounces. CODX though, you know, if you try to do the same thing, all of a sudden you would have got, you know, caught on the wrong side. You could see that, yes, it bounced several times, and these were nice bounces as well, 18%. But you don't want to get on the wrong side of these. To me, I found a lot of downside risk. CODX was halted even on the way down. And then what else? There was something else. Yeah, I don't know, buying CODX or APT, part of the gap and go strategy, where we're waiting for stocks that are gapping up to continue going. I find these extremely overextended, and anyone that's even an investor is going to probably want to take their profits. Anyone's going to want to take their profits. Only if you're just blindly gambling, you're going to be like, okay, maybe it's going to go to 30. But there's definitely going to be some profit taking at one point. You know, buying these quick pullbacks back to breakout zones is always something I like to do. So maybe trading this in the $15 area would have been a good trade. But that's kind of the reason I was not looking at CODX or APT. And AIM, again, 14 million market cap, 8.2 million shares outstanding. I don't know. We probably could have traded AIM. It just wasn't really moving that much. And then right in the market open, it just sells off. And I started paying attention to it a little bit. And this is what I mean by kind of pulling back under VWAP. I typically don't look for those. Pulling back 20%, but I liked it when it hovers above VWAP. And let me quickly go here. So yeah, this thing opens up. Nice little rally here though. This could have been a good one. 15% move, pulls back to 1.7, finds support, and then just rips. But then this pullback was really aggressive. This would have been a really hard one to trade. And it was a good thing I was extra careful with AIM, because when we were consolidating in this area, I almost bought it. I was looking for a break past 1.8 and then into new highs, because their long-term chart looked like it opened up really nicely, and there was good potential here after it breaks 1.8 to really, really run higher. I don't know, maybe around 2.3 or something like that. It would see some more resistance. But I thought that this thing had a good ways to run, and it was building up some nice volume here. Check out the volume down here. And on the 5-minute chart, you know, we have some nice big green buying volume coming up. And this is when everything else was pulling back. So I was like, okay, AIM is building up some momentum, but it was good I didn't trade it. I was waiting for a break above this, really for the volume to come back in, maybe a pull all the way to 1.92, and then buy on a pullback, a quick dip, and then, you know, sell into any selling pressure, or, you know, sell into the volume after a break of 2. That was kind of my thesis. But I wanted it to prove itself to me first, and it was not able to break above 1.8. So I was like, you know what, I'm not going to be trading it. looking back at especially CODX and APT, it feels like it's so easy to think about trades in hindsight, that 2020 vision. You're like, why didn't I just buy all the pullbacks back to support on APT? I could have done that 10 times and, each time made like 15%, kind of funny. But yeah, just look at all these pullbacks, 15, 17%. It just happens so many times. But you just don't know. You don't know when it's gonna turn into CODX and it's just gonna absolutely fall off a cliff. Okay, so let's go to our IRA account and let's talk about the 2 trades that I just made, and one is still open. It's going on a little bit too long. I'll talk about it. And yeah, so the first one I want to talk about is TNXP, and this is the one we closed out today. This was a pretty sweet trade, and this was also the lead gapper today. A little bit overextended in my honest opinion. So first big green day, and then today is the second big, I guess you could say, green day, although it's a red day, but it's gapping up, so that's why. But let me scroll back a little bit here. So this was the one that I think we traded yesterday. Let me see here in my cash account. We had 2 trades on this one. Yeah, 2 little trades here yesterday. And I was thinking, okay, so this is our lead gapper on the day. It's the first green day, which I like. There's definitely some upside potential. I mean, long-term chart's really rough, but it's your classic, biotech, everything's running in this industry. First green day, up on a catalyst. This one actually had news, which is nice. They had a, partnership with a Southern Research to develop a vaccine against the coronavirus. So there was some things going for this big green volume. I was thinking, since I like to watch the top of my watch list from the day before and add those, 2 to 3 stocks onto my new daily watch list, I was thinking TNXP had huge potential for a gap up. I don't know if it's going to gap and go, but it'll probably gap up and maybe retest the highs. So on my IRA account, I went ahead and put a limit order around this former support level. Here you can see 0.9 is big support. So I went ahead, I guess you could say I almost front a little bit because I put a limit order at 0.904. And the entry to this trade all happened when I was no longer online. I got a notification about this trade and I knew my risk tolerance was about 20%. I'm a little bit more flexible since these are swing trades, they're not day trades, and I understand they're lead gappers and they're extremely volatile. So sometimes you get those flash moves where you're down 15, 20%. And you just have to be a little bit more lenient. And that's why I always would recommend not putting all of your money into any one trade. And right now I'm being way aggressive. I'm only dividing my portfolio up into 2 trades. But now that we're over $3,000, I'll probably start allocating only 1/3 of my portfolio per trade. But at one point when this was just $1,200, you got to get aggressive because I don't know, having like $300 position sizes is just gonna freak me out a little bit. Yeah, this thing runs and it was a pretty nice move pre-market. I must say though, I was a little annoyed, and this is why. Going to the long-term chart, there's a lot of resistance here, a lot of tops at around about 1.8 to $2. And I was like, I don't know if we're going to break out in that area. And since this was a lead gapper, TNXP was on our watch list, I think on Tuesday or Wednesday, or when did we trade this? It was on Wednesday. So this is just, the first green day. I thought, okay, a lot of these from, these previous gappers, I like to put the top 3 or top 2 on my every new day's watch list. So today I put CODX and APT on my watch list from the day before. I also put a few other ones, even though they weren't on our gap scanner per se. Some of these were, but some of them weren't, because I know a runner from yesterday, especially if it's just a first green day, they're probably going to run again. But you don't really know. I'll show you VVPR in a second, and a lot of stocks, these small caps only gap up just once. They have one big move and then that's it. They go back to Neverland and you don't hear from them for another few months, if at all. So you want to be careful as well. But what you do see sometimes is a nice gap. Sometimes they don't go. TNXP did not go, it just gapped. And I wanted to take my profits in that 1.8 to $2 area. So I went ahead and put a limit order before the market even opened, before pre-market even opened at 1.74. And for some reason, the price went all the way to 1.79 and our limit order did not get out. And I was a little annoyed because, we were up about 100% on this trade at one point. I think we entered this trade with 1,300 shares and we bought at 0.9. So about, I don't know, was that like a $1,200 position? So yeah, I have not calculated yet, but this trade is between, I think, 90 and 100%, somewhere in that area. And, then we pulled back a little bit and I was a little annoyed. I was like, I had the limit order there and it did not get executed. And I checked, the limit order was good till cancel and it was also extended hours. So I was really annoyed about that. I didn't think we were going to have a perfect double top here again. I don't know why. I'm a little conservative with that stuff. So I moved down my limit order to 1.71, and you won't believe it. This time the price literally came up and kissed my limit order, and I got executed perfectly. So right here at the tip, actually it went to 172, but I tried that execution at 171, and I was pretty happy with that. I did not want to trade it out of the gates. I didn't know if it was going to be a gap and go. I knew it was a gapper, or it was a gapper, but I also knew I was going to be day trading in a second here, and I didn't want to think about TNXP any longer. Plus, I was already up almost 100%. I'm not trying to get overly greedy. Like, this is more than I could ever ask for, and I've only had, I think, one more trade like TNXP on growing this account from $1,100 to $3.3 thousand. So I didn't want to get overly greedy, and I just closed the trade. I was super happy about it, and let me share another trade, VVPR, which didn't go as well, but overall it has been going pretty well. And I want to share some things I have learned from this support line bounce strategy with the small caps of the lead gappers. Okay, I know this is a long video, but try to pay attention now with VVPR, because I think there's some really good lessons. Somehow the best lessons always come from the losers. And this is it. So VVPR was another one of our lead gappers. I think it was from Tuesday. I would have to check. So let's see over here. The 25th, I believe, was Tuesday. Let me quickly confirm that. Yeah, it was Tuesday. So this one has some nice spikes, but none of the spikes really hold. Sometimes you get maybe a second day out of it, a third day, but rarely. Usually it's just one spike up and then it crashes down. And I know that. So I'm trying to be really cautious with these. On TNXP, I got really lucky, I gotta say. But with VVPR, let me go ahead and talk about this trade a little bit. We did the same exact thing, and we bought the market pullback. This was a lead gapper, big support in this area, 1.47, and this thing bounced up about 7-8%. We were profitable in this trade, and I remember seeing that, and I was like, okay, well, that's not a bad bounce. I put my limit order here at, I think, like 68 or 69, 168, 169. I was looking for just a little bit more pop to the upside. I'm not trying to get too aggressive on these, but I thought, this has been a big pullback. So I was thinking there's a really strong chance of a bounce around here, which there was. I mean, we bounced about to 1.59, 7-8%. We were up on this trade, and I was not trying to get greedy or anything. I was just looking a little bit more to a reversal or a return back to, or a retest. Sorry about that, guys. A retest back to this maybe 1.7 area, and I had my limit order here at 1.68. Unfortunately, it just did not work. And one thing that I've really learned out of the, especially from the crypto trading, because it's very similar to what I'm doing with this strategy. And this is actually, I learned this strategy from trading stocks originally before crypto. So I've been doing this strategy for a really long time. And what I've learned, and this is even true for day trading breakouts, is if you're not right out of the gates, it's typically a loser trade. So what I want to do, and I've been thinking about this for quite some time, is I kind of have a 3-day horizon right now. And so if the trade does not work out or whatever happens in 3 days, I like to close out my position and just be done with it, move on, take my loss. I haven't been setting any stops on any one of these, and so far it's been going good. Although I know, a lot of these are very shady companies, and there could be a big crash. So I just don't like being stopped out at a really bad spot, and I like to get out by myself. So, but what I have noticed is just that turnaround point. If a stock is going up and it's stair-stepping up and then holding maybe more than 3 days, could be a really good thing. But what I've noticed, if you're wrong, you typically know you're wrong right away. And I just that was the same situation with the AHPI, where it should have kept on breaking out right here, and it just didn't. And because of that, we decided just to get out of the trade right away, and it was a really good decision. I kind of knew that it was going a little bit slower than it should have. That ultimately is how I feel about VVPR. I should have just got out of this trade and I will probably today or tomorrow. And you might also think that, well, maybe, check out the long-term chart. What if it, it's close to $1 right now? This is big support. There could be a big bounce in this area. Yes, but also no. I mean, this thing could go down all the way to 59, and then they have a reverse split, and then it goes down even further, and then, it's a sub penny, and before you know it, your $1,200 investment is now a $10 investment, and is that something you really want? Plus, you also have to think that, this is my Roth IRA account, and I can't even really add much more than $6,000 to this account a year. And right now, half of my position or my account size is in this one trade. So if I want to trade again, which I do, there's many opportunities all the time, especially today, I can't until I sell this trade. So just holding it forever is also not an option for me. Plus, these are small cap stocks, and when you've been trading these kind of small cap stocks for long enough, you kind of realize that the most of them are just horrible companies, and they all kind of end up at zero. So knowing that, I'm not investing in these companies. I was trading these companies, and I'm not going to let a bad trade turn into an investment, a horrible investment. So if there's one thing to take away, just you typically know you're right from a trade fairly quickly, even with a swing trade. It's not something that you wait around forever and then eventually you figure it out. One thing I've learned about trading is that it's not about being right or wrong. It's just really about how you manage your risk. And so far for this, support line bounce strategy, I feel like it's going pretty well. And I just need to maybe tighten up when I get out of these trades a little bit. I think that's the biggest thing I can improve. I mean, there's obviously a lot I can learn. I've been doing it for several years, but specifically with these, big breakout pullbacks, lead gappers, I haven't, optimized this strategy entirely. So just take all this stuff with a grain of salt and try to figure out how you could maybe customize it, cherry pick some of the information I'm telling you, and, figure out how you can make it work for your own personality. I think that's a really important part. And, it's actually kind of interesting because this has been doing much better than my breakout trading $25,000 challenge, which totally makes sense because I've been doing support line bounces for many, many years, while breakout trading is something that I've only been doing for about 4 months. So there's still a lot for me to learn on that one. I think both these strategies have a time and place, and I like to put them in 2 different accounts, and I could kind of not have to think about either one all the time. And it's kind of nice to have 2 different income streams from 2 different trading strategies. I find that really, really cool. So I hope you guys got some good ideas from me sharing my Roth IRA account growth experience with you guys as support line bounces. If you did, don't forget to hit that like button. And if you are new here, definitely consider subscribing for some more trading information. And I would love to also see you on the next stream, which is tomorrow. So I will see you guys first thing then. That's everything for this video. So like always, stay safe and make some awesome trades. Ciao, ciao, guys.